The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And our stock of the day is Virgin Australia. It has held its AGM, saying that it's continuing to experience strong demand so far this financial year. In fact, it says domestic capacity increased 5% in the first quarter of 2026, and that it expects 4% growth for the first half of the year. Revenue per available seat kilometre growth is expected to be between 3 and 5% in the first half, in line with its previous guidance. And Virgin is targeting net capital expenditure in 2026 of around $800 million. Share price not really reacting to the news on this Friday, which has seen the market sell off significantly. Let's get a view from my guests, Junbei Liu from TenCap and Mathan Somasundaram from Deep Data Analytics. Junbei, recent re-entry for Virgin to the public listed market. Were you in at the IPO, or do you have any interest in it after today's update?
Yeah, we're in the IPO, and we're the cornerstone investor. We're very excited that there's an alternative now to Qantas, and it was listed at a very cheap valuation. But even right now, the valuation has been very, very cheap. I think with the update, reaffirms that the demand is still pretty good, and it is still a cozy duopoly there. Although there is a little bit of slowdown, as Qantas highlighted as well, across the corporate sector, but still pretty healthy. And the good thing for Virgin is that the growth is actually very strong because coming from the cost efficiencies. So with the update, I think highlight things are still pretty good. Both Qantas and Virgin, actually we got buy on both of them. They both look very, very cheap based on the growth they will deliver for the next 12 months. I put them both on a buy.
There we go. Buy from Junbei for Virgin. Mathan?
Yeah, it's a tough one. I think if you look through the sector, you got Qantas, Virgin, and then you can look at slightly different Alliance Aviation. They've all had tough markets in the short term. They've come back a bit. The travel business is holding up relatively well, but I think the market is looking at the consumer side of things, and will that play out for the medium to long term? And that's what the worry is. These are classic cyclicals, right? So you don't need to rush and buy in. At the moment, I wouldn't be jumping in. I think the market is starting to worry about the outlook. Will that hold up? I think it's pretty solid. I know my family flew to Vegas last week, so I know what the costs are. But will it hold up in the medium to long term? I think it's going to get a bit tougher for consumers. So that'll show how that plays out. So at the moment, I wouldn't be chasing it. It is one of those interesting things that in a lot of cyclical stocks, it always worries me when the forward multiples looks cheap, because that means most analysts are optimistic. I want analysts to be angry. I want analysts to be annoyed by these companies. That's when your surprise comes in. I think when the markets are relatively optimistic about a sector, it always worries me. I think the outperformance by Qantas has the market very optimistic about the sector, but I think the cycle might be relatively negative, so I'd be a bit careful here. We're not in the travel business, so I wouldn't be chasing airlines. I know Warren Buffett has always said, you don't want to invest in airlines, and then he broke that rule and went back in and lost money there too. So even the great ones lose money in the airline. It's a tough business, so we're staying out.
Got it. Thank you, guys. All right, that's Virgin Australia. Huge thanks to my guests, Junbei and Mathan. So stay with us. More coming right up.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.